Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning. I'm actually like reasonably on time. I like to try to start at 8:15, but I've been late past a couple of days. But we did good today. So we've got a market that is just going absolutely bonkers. Just while I have been eating, we had a 20, well, how far? It wasn't really 21. 16 tick or so, let's say, move up in the treasuries, and equities have pretty much collapsed. They moved below the overnight opening range. I'm gonna need some levels here. This is just crazy. And we haven't even opened up yet. We haven't even opened yet, and the market is already crazy. Okay, so the opening range is just all the way down at the bottom. Makes it very difficult to think about really going short, but let's see here. We got any? So the E-mini, the E-mini falling down right here, not necessarily a big deal, in my opinion, because we got the yesterday's point of control to contend with, right? It was kind of a counter trend day. It could be a reversal. Treasuries. Treasuries, I would expect treasuries to be up today because of the auction today. We do have an auction. It's also Wednesday, so we'll probably see a lot of funds out there allocating things. We don't have any news other than that, though, so I would be cautious. Let's bring Discord up over here. Well, they are holding 2,000 on the level 2, which is about what we'd been getting. I'm getting a short here. Yeah. So there's the open. Okay. Huge iceberg there, but they're going to eat it. So I might be in a spot that's, might be in a pullback spot. Hmm. A 5 year seems to be leading. Okay. This may completely collapse, but it may also just move 2 ticks or whatever and stop. So okay. There's this picture here. Ding 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 ding. Print screen. Okay. Well, let's see here. Donald Trump has been tweeting overnight. South Korea. For the past decades, US has paid very little, but here, request paid 99,000. I think this may just go down. Man, okay, so that's an 11 tick swing down. It's really hard for me to say where it stops. The E-mini recovered there quite nicely. Okay. Well, they're still selling pretty aggressively, but 15.5 is holding for now. And I'm seeing something on the ask move around. He moved it from here to from 20.5 to 18.5. So he moved it from here to here. Here to here, that's interesting. No, by the way, good morning, Uzi. I didn't see you there. Quiet warning so far. Okay. I know that when the chat goes quiet, that means that you all diligently in watching your trades because it's too hard to talk, right? Okay. Okay. They're going to be stingy with 13.5 and 13 because that's where the step in the profile is. You can see the 5-year being kind of flaky there now. Oh, man. That's where we got to take it off. See, they fill us at 13.5. Not yet. It could have gotten 14, but so let's go down in here. Let's make sure we're logged in here. I cannot see. There we are. Okay, so it did do it. Okay, so we should go into the journal queue. Do we still have all of these losers here? Okay, so this one I'm going to say was kind of a reversal. It was a reversal, but I was in late and took it as a continuation. I actually could have gotten a few more ticks out of it, but I got out on the iceberg. Aha, I totally put it in there correctly. It was a reversal. Okay. Type. Reversal. Save. All of these were reversals. Okay. Good view. Good deal. Okay. Now I should be able to get my notifications correctly. I hope. It's still, it looks like it's going to continue through. He thinks that we're going to go all the way back to 162. One 16208, maybe. That seemed to be driven by the 5 years. So this trade, I think, seems to reinforce our thought that we do need to have all three of them up there because, look, new high, more interest, reversal, total collapse. So Joko Sugar Harto. Hello, I'm from Indonesia. Well, that's cool. So what time is it there? Is it pretty late at night now there, isn't it? But thank you for joining us. So I think that this is going to reverse for a little bit, but I'm not getting like a clear signal. I guess kind of am in the 5 year. So I was supposed to say during our opening, but because I didn't mention yesterday was really, really bad, right? And I think that the main reason that it was so bad was because we were ranging around in a really unusual manner, and that was causing us to be in a spot where you just, with the amount of risk that I was willing to take at the time, I couldn't hold it. Um, so we would have taken 3 losers, but really yesterday it should have been like not trading. So then the question was, is it going to like flip on us or start doing weird things? And here we can see it still behaves the way that it should. So the signal's not changing on us per se. It's just was a bad day for that strategy. European bond markets in full flight to safety mode as the UK and German bond yields crater. German and UK bonds jump as yields dip to record lows. China's household debt has grown so much that trade war stimulus is largely ineffective, study shows. Ugh. Donald Trump also pointing out that the Ohio shooter had a history of supporting political figures like Bernie Sanders and Elizabeth Warren and Antifa. Okay. I don't think it's important. Don't get me wrong, folks. I'm very right wing. I do find it alarming that these Antifa guys are kind of like committing violence now. And I would expect that trend would probably continue. But the shooter's ideology is not important. Focusing on the shooter's ideology actually probably makes things worse. Because I believe at this moment at least, and I guess this is just a personal thing, I don't necessarily have data to back this up, but it seems to me that these guys are primarily interested in attention, and they're latching on to whatever kind of ideology makes them feel the way that they want to feel. And they can get that from any extreme ideology. So where they came from, if they were left or right, it doesn't matter. Let's clear the trades up so that we can, oops. That's not, okay. It's like, oh no, I didn't delete the volume profile, did I? That's fine. Okay. We'll do the same thing here. Okay, so there was a little gap down, but it's kind of like for no reason. You could, if you really believed in a short, I suppose you could take it, but I don't think that's the best opportunity there. I have to say that collapse was pretty big deal, but I mean, we might have put in a high for the day, but it's a no news Wednesday, so how it may just go nowhere for the rest of the session, or it may toy with us a lot today. You know what I mean? You know what I'm saying? There really isn't anything up there. Let's see, is there like any European or Canadian news today? Wednesday. Oh, Evans was speaking earlier. 8 o'clock IV PMI from Canada. Nope, it really is just like a no news day. And what's John got in here? We have not hit in ZB the high of Trump's election because the day that Donald Trump was elected, it shot up a little bit more. So it's interesting to me because there was quite a bit of conversation about this in Discord last night. Good morning, Wrong, by the way. Couple of people trying to make longer term calls or like just pointing out some longer term levels. And I kind of feel like that any kind of a technical level like that is not going to matter. Because, I mean, right now, the market seems to be convinced that there is going to be a recession. And quite frankly, if this whole trade war thing with China continues the way that it's going, and I would say that it's pretty likely that it will continue at least until Donald Trump is reelected. So if this continues, then there is a really good chance that in the next year we're going to go into a recession. So if we're going to go into a recession, the Federal Reserve has to take interest rates back to zero and start quantitative easing again to prevent the economy from completely collapsing. U.S. debt skyrockets. These yields are going to have to go up. These prices. The yields are going to crater, but these prices are going to have to go up. Lewis, Joe Quinn Castro, I'm pissed that he's revealing names of voters when we vote. It is such a quiet, respectful, private time of decision. Well, he didn't reveal names of voters. He revealed names of political contributors. Oh, Wrong, you're going on vacation? You know what? This is a good time to go on vacation. This is when most traders go on vacation. It's August. That's why the liquidity is, part of why the liquidity is so low. So I think that they turned the robots off and said, okay, we'll wait until September. Until, what do we call it? Is it Veterans Day, Memorial Day? I forget what it is. That holiday in September. Until that, I would, the trading's not going to be as good. Anyways, I don't think he was revealing names of voters. I think that they were just showing donations. And this is public information already. And it's publicly information that I've seen liberals post before. So I don't like it, of course. I don't think that that your name should be public because you donated to somebody. I don't think it matters. Maybe a corporation, but individual people, I don't think that should be public information. But I don't know if it matters, I could be wrong, but I kind of feel like that a lot of my conservative friends are a little overly triggered by it. Okay, the E-mini is doing some interesting stuff here. They kind of look like they're trying to push for another low. And the treasuries are popping up a little bit here because of it. Actually, a lot bit. I'm not a believer in using Fibonacci numbers for target levels. I agree that sometimes they do get hit, but in reality, so do random lines on your chart. Right? Okay. So they were kind of starting to look like they were going to take a step up there, but they stepped back. They haven't traded into 13 yet, though. Well, that's curious. Well, now they've got to trade into 13. Come on. Should also note that the 30-year came down there more than the others, so the knob spread is steepening by just a little bit. There was definitely a signal there. Given its location, I believe that it means that we reverse higher, but I'm a little uncertain. It seems though like something significant happened there that a lot of people made decisions. And the fib traders like to point to the 50% level, which is not actually a Fibonacci number, but if they didn't use it in their sequence, they would not be able to claim as many victories as they do, in my opinion. Yeah. It's totally right. I don't know if the Fibonacci numbers matter. But I kind of wonder, I think that well, I don't think that Ace uses it, but I've seen some traders that seem to do pretty okay and they're using Fibonacci numbers. But they're not just using Fibonacci numbers. Okay, they're hitting that 30 aggressive now. And a lot of interest again. So I think that a bunch of people got long there and are kind of stuck. Yeah, okay, so there was a stop run there at 12.5. Gee. You know why it works? Because if you identify the trend, it can pull back 50% or one third up. I think that's the reason why sometimes it works. Yeah. I think that there is something to that when you get a move, a certain number of people are going to be looking to get out of the move at that spot. You know, like here at 13, this 14 half to 13 half, you know, we saw a ton of icebergs. That was various large players that had caught the short, exiting their positions, and they were able to push it lower anyways, you know? And so it's like the same thing with the Fibonacci number is like you have a move and then people take profits and all of the scalpers get out, then it ends up moving halfway or a third or whatever it is. Even though there's not necessarily anything particularly important about that number. I mean, I think it goes into like, I want to make a video about this. I was actually thinking about making a video yesterday, but I ended up doing other stuff. Need to, I was like, I don't know if I look super great for video recording. You know, my hair, I haven't cut my hair this week and all that stuff. But, you know, just on technical analysis. And I think one of my bigger points with technical analysis is like, does it work? Does technical analysis work? I actually do believe that technical analysis works, but it doesn't work because everybody knows the technical analysis. So even though it can definitely explain market action and things like that, it doesn't provide you an edge because everybody else knows about it too and have already sucked the edge out of it. You know, it just kind of like puts you on par. And I feel like it's the same thing with Fibonacci numbers, is like it can kind of help you understand, you know, places that they might go to, but it's unlikely to provide you a significant edge on its own, enough to be a profitable trader. You do just as well using 0, 50%, 75%, and 100% while using the same for your positive and negative extensions. Yeah. Okay. So I am seeing the 5-year buying here. That might just be a little pullback. I mean, with the E-mini moving the way that it is. Did that happen before E-mini went for another step? It did. It kind of did. Oh man, my back feels a little messed up. I'm gonna try and stretch it here real quick. Anyways, as I was saying, the first point was that the technical analysis and all of these other sorts of things, I feel that they only just kind of put you on par with the rest of the market. But then point number 2 is, I honestly think that we're still just trading a random line. Does it make sense? So like the only thing that really predicts that really explains why price moves is order flow. That the combination of liquidity and demand in that particular area changed and caused price to move. And that's it. And where that particular, why that happens there at that spot could be for any reason. It could be because some really big trader is trading off of a Fibonacci level. It could totally happen. Although I will tell you my experience when I worked for a firm, and I mean, I didn't interact with the traders a lot, so just take this with a grain of salt, but they did not have that sort of stuff on their screens. Okay. They had mostly DOMs and profiles. But it could be that. It could be a piece of news. It could be that somebody just felt the urge to reverse it there. It's random. It really is random. So it's like, yeah, technical analysis can help you, but really, it's not going to be enough in the vast majority of cases. So you should learn it, you should know it, you should look at them, but wouldn't base my strategy off of it. That's kind of what I want to say in my video on technical analysis. So we'll see if I ever get to it. Maybe next time the kids are away. Holy shnikes. Okay, I don't see any news coming. I don't see anything on Twitter. Let's just refresh TweetDeck, because that seems weird. I should be getting stuff. Well, that sucks. I was down there at 13. I was like, okay, it looks like there's a reversal there, but I want a better price, and maybe I can get 12 or something. Should have just taken it. That could have been, well, if I had gotten 12, then that would have been 8 ticks, right? But if I had got, I think that I would have had to have taken 13 half. Then I would have gotten, 1, 2, 3, 4, 5. And after a run like that, I think you take it off at 16 and wait and see what the deal was. Okay, FedEx to end U.S. ground deliveries for Amazon. Is that the news? I don't think that would cause the treasuries to move. Man, that's super weird. And Zero Hedge has this crazy chart of global stocks and bond yields and how they have diverged so much, and they seem to think that the stocks need to come down. I'm not so sure. Okay, so we're getting another turn here. I don't like this one. I don't like this one because we just had some sort of a news event push us up, even though it's not hitting Twitter. The FBI is listening to me. My phone is making those weird noises into my microphone. You know, FBI, you can just tune into the stream like everybody else. Like see, it might continue. No, Futures Trader 71 has been on vacation. I did not know. I don't know. That was pretty crazy. Where's your tinfoil hat? Not wearing it today? No. Yeah, this is acting kind of weird now. See, it gave us a high interest spot. And I said no. I don't think you take that one as a reversal. And sure enough, 2 ticks higher. I got to tell you, when the market is moving the way that it is, this sure is a good way of seeing things. But I want to know what's going on. Yield curve is at too wide a margin, says Forex Live. Well, my Twitter stocks are really failing me here because that was something. I mean, that was something. What was it? It didn't affect equities. It was only the treasuries. Treasuries don't just gap up 4 ticks. I need to go and buy the tinfoil hat. I mean, the thing is that they solved that, right? Let's see here. I'm not going to take a trade here, so let's look it up. It was, what was it? Yes, that's right. Man, what was it? I swear that they solved it. Here we go. Dun, 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 dun. Yes, that's right. So by January 2018, some of the government's own experts had ruled out a sonic attack. So I read that article it's on Vanity Fair. I read that article on Vanity Fair because the whole thing was, it was like, we need a tinfoil hat because they're attacking diplomats with a sound weapon in Havana. And then apparently it turns out that, it wasn't a thing. Let's see here. What did I see? Still reading this article here to see. I forget what the end result was. Oh, they're saying that it was a pathological contagion. Basically mass hysteria. I think that's what they said. Anyways, let's see what's wrong say here. And in my opinion, in the case of LA waves, it can be another higher high, higher low. I'm really interested in Elliott waves, but it's complicated. I couldn't learn and identify. Oh, that's interesting. You know, that's something that I've kind of wondered about, but every time that I search about it, I don't find the information that I want. I think I need to read a book because I look at cryptocurrencies. So like my cryptocurrency indicator. They're kind of ranging here at 17. I'm kind of thinking maybe now I could take a short, but I don't like it. It's kind of a time period now that I don't like taking a trade, so and there you go, it goes higher. Oh yes, that's right. So like this thing right here, my Bitcoin indicator. Look at that freaking bid right there at 19. Something's going on. Federal funds futures imply traders see 28% chance of Fed cutting U.S. rates by 50 basis points in September, up from 15% late on Friday. CME Group's FedWatch. That can't be it either. Oh, I missed Donald Trump tweeted something. That was 21 minutes ago. 3 more central banks cut rates. Our problem is not China. We are stronger than ever. Money is pouring into the U.S. while China is losing companies by thousands to other countries and their currency is under siege. Our problem is a Federal Reserve that is too proud to admit their mistake of acting too fast and tightening too much. They must cut rates bigger and faster and stop their ridiculous quantitative tightening now. Yield curve is at too wide a margin and no inflation. Incompetence is a terrible thing to watch, especially when things could be taken care of so easily. We will win anyways, but it would be much easier if the Fed understood, which they don't, that we are competing against other countries, all of whom want to do well at our expense. I went down the LA wave rabbit hole years ago. It isn't worth it, in my opinion. Okay, so the thing that I'm wondering is I'm seeing here on my Bitcoin chart, okay, There was 3 waves. 1, 2, 3. And then it died off and the manipulation stopped. And now we're getting it again. 1, 2, 3. So is it the same thing as it now? Is it going to die down? Or is that just junk and it doesn't matter? Who knows? We'll see. Something is happening out there and Twitter does not know. There was there for a moment a pretty thick bid, but it disappeared. You know what I think we should do? Oh, we should get rid of this first of all. Bitcoin is moving too. Maybe China is messing with their currency again. Well, anyways, as I was saying, I think that we should come in here and add the order flow thing. Order flow market depth map. Ugh, I'm reading some news stories waiting for equities to open. Just came across an article about a hired pet sitter slamming a puppy into the ground, complete with a video. Good grief. Don't read that sort of a thing before you trade. That is just likely to get you upset, you know what I mean? Okay, so I'm already seeing 2 things that are wrong. Okay, first of all, I do not need the real time. One, two, I need more displayed mode, last known depth, show lines on close, input series. Okay, I guess that's all you can get. There we go. Okay. The real-time display width doesn't need to be very big. Okay, cool. Cool. We good. That E-mini is selling. I don't know. So I think 28, 22, 25 might be a good spot to look for in equity indexes. Let's see what the guys in Discord are saying. Yeah, they're just saying today is going to be fun. I think that this move up might be from the Chinese dollar, but I don't think that I have any data that would let me see something like that. Let's look and see. We look through our data series is here. Forex maybe. Search China. RMB. Is this something I can see? No, it is not. I am experimenting with drawing profiles using NinjaTrader 8's profile drawing tool, drawing hourly profiles, and see how the various levels play out. Oh, that's interesting. Speculator sat there and quietly listening. 1933, when the dollar was devalued, is a period of history that might offer perspective on devaluation. I believe 2 more countries may devalue. So I think you would be right, except for that so much else was going on during that time, you know? I mean, in the Great Depression, the biggest issue was that the Federal Reserve needed to ease and refused to do it. They did not really understand what their role was. They darn goofed. Okay, so I'm picking up on something here. It's not giving me a very good look for a reversal, though. I'd have to say, so far, this market depth map seems useless to me. I wish I could get my histograms in Jigsaw. Yes, but from what I've read, the primary cause of the depression was credit buying on margin because everyone was very confident and the economy had profited from the first war. Well, I mean, that was... I think that was part of it, right? So... Or rather to say, like, during the 1920s, for instance, not the 20s, the 1907, there was a crash for credit, right? And what happened was all of the traders were trading on credit, and then there was a huge market crash, and nobody could pay for it. So it was like the market had moved more than the traders' margins, which doesn't happen very often. But there was actually an instance of this in markets earlier this year, and I think it had to do with like energy in Norway or something like that. And this guy, he made this huge, massive bet, and then the market moved against him, and he had so many futures, and it gapped down so much that he wasn't able to pay the margin on it, and nobody could pay the margin on it. And so the clearinghouse association or whatever had to step in and bail them out, essentially, right? And that happened. Similar thing happened in 1907. Nobody had the money to pay for what had gapped down, and so J.P. Morgan and a couple of other guys came in and saved things. And so they didn't change the rules about the credit margin that you could get for trading stocks and stuff. And so things continued, and then when the economy kind of turned south in the 30s, things really fell apart because of the margin. So you're right that was kind of the cause of the depression, But that was the cause of the market. But what I would say is that was the cause of the market panic, but it was not the cause of the depression. If the Federal Reserve had understood what its job was and was good at doing it, basically they had reduced interest rates, then it would have been a recession, not a depression, right? But what we learned was that because the Federal Reserve acted inappropriately, there was literally no money out there. There was literally no dollars to go around. And so, you basically had a third of the US population basically became nomads. Right? So I'm just saying that the devaluation of the dollar, was going to be heavily related to that in the 30s. And that's a thing that is not happening today. At least not yet. Right? Like, if the Federal Reserve were to not ease, then it would be similar sort of a thing, right? They refused to reduce interest rates more this year, and markets continue to panic. In mitigating those panics by issuing loan certificates that were backed not by gold, but by banknotes held by member banks. Oh, wait, there was another comment I missed. Sourcing and listening. In the period between 1853 and 1913, the U.S. experienced 10 financial panics. The clearinghouse paid a role. Yeah. Yeah. So this is why the whole thing with the Federal Reserve really drives me crazy, to be honest. Because it seems to me that the vast majority of Americans do not understand how the Federal Reserve works, or why we have it, and what things would be like without the Federal Reserve. Because they're always complaining about what they do. Okay, the Federal Reserve, they increased interest rates. That's bad because, they that's bad for the economy. There's less. It's harder to borrow. And then, oh no, the Federal Reserve reduced interest rates. That means that we don't get as much interest for fixed income, and that's bad. And it's going to cause inflation. and it's like, here's the thing. Everybody is affected by what the Federal Reserve does, aren't they? And some people benefit from lower interest rates and some people don't, right? If you are old, even older than you, Win, even older than you, John. Well, maybe not John. I don't know. John is, I think, kind of retired, but even then, if you're like in your 60s, right, or your 70s and you're retired, and they reduce interest rates, and that is not good for you, right? Because you are relying on fixed income. You don't make as much now. So I am old-ish, yeah. I think you were saying you were your mid-40s, right? It was kind of funny because I always used to make fun of old people, but now I'm 35, and in the circles that I run in, I'm the old person. Like in weightlifting, I'm 35 is old. I'm not 35 yet. Next year. Anyways, so the point is, there's always somebody out there that is going to be hurt by whatever the Federal Reserve is doing, and is going to be out there on the internet complaining about it. And so what you always hear is just the Federal Reserve is bad. The Federal Reserve is bad. Because, the people that benefit from it aren't talking. And I mean, that's the thing that's so crazy about it, is that it's like, okay, so if you are hurt by lower interest rates, you should hedge that by buying treasuries. And here's the best part about it. The Federal Reserve does everything they can to tell you what they're going to do, so that you can you can adjust for it. It is like the most well-tracked, predicted thing on the planet. They tell you everything that you need to do to hedge against it, but for some reason people don't do it. So what would happen if we got rid of the Federal Reserve? Well, we would have a market crisis, and there would be nothing to stop it. 2008 would have been a depression. They wouldn't have been able to revive the financial system. All of the banks would have gone kaput. The entire U.S. economy would have to start from scratch. Maybe now we would be getting out of it 10 years later, right? And also, probably, we would have had multiple large crashes since then, because the Euro crisis would have led to a complete disaster. Well, a complete crash of the financial system again, right? And then when you did have like the recovery, it would have gone, well, actually, I guess in this case, probably wouldn't have gone too far, but like in the 90s, you probably would have had a market top sooner, because they were just pushing too high, you know? Or like in the 80s would be another good example. Because those times when the Federal Reserve was raising interest rates and preventing the market from overheating, instead you would basically, like every 5 years, you would have a financial panic without the Federal Reserve. So the issue I'm having here right now is I would like to sell. I don't have particularly good risk reward. You know what I wanted to see here on this, it is not showing me, so I'm getting rid of this. Goodbye, order flow market depth map. You are not that useful. I suppose I'm just going to have to program my own. Domenic Spirit asks, you trade Bitcoin? Well, right now we're not, but we definitely keep an eye on it. And if you go to my Patreon page, which is linked in the video description, I post a cryptocurrency series of charts every day. Subscribers get to view the chart that day, and everybody else gets to see it a week later. So you can go there right now and you can go and look at, like, the charts from a week ago. But it's kind of a fundamental analysis perspective look at things. It seems to indicate that Bitcoin is overbought or has been overbought, but that value is starting to catch up to price a little bit. So we'll see. I have been watching Bitcoin here a little bit. I like to have this E-mini one down. I just don't have enough room on my screen for everything that we want to see. But the I lost my train of thought. When I see Bitcoin moving up and I see Treasuries moving up, that says to me, China moving again. That appears to be what's going on. That appears to be what's spooking markets and causing them to gap all around here. But anyways, I wouldn't recommend day trading Bitcoin, but I do trade Bitcoin on a longer term basis. It's been a really long time since it's given me an actionable long. There was a spot where I kind of thought, well, I suppose you could maybe buy it here, but it's much more likely to continue going down. And then it never continued going down, and I'm just sitting here like, oh crap. I believe this economy is on a sugar high. There's a push for another tax cut, and the banks are hunkering down, setting aside cash, and will be careful with interest. At some point, I would like to link to a site where you can check for bots. They're all over, everywhere, not applicable statement. It's just a simple fact of life here on the frontier. And the site to check if a particular individual is a bot. I don't know. This action is just kind of okay. See, the problem with when currencies is the dominant thing is that it can just move really quickly against you, and there's no way that you can really predict it because the thing that is triggering it is not something we can see. Jeez, I was just about to say I think you buy that, but nope. Too late already. And I'd rather not sell it. Jeez. So I think the only way that I can really see what's going on here, I guess I can open up Trading View. So if I go over here to Trading View and look at my main chart, put it on 1 minute bars. Yep. I can see the Chinese dollar moving up to new highs there. Well, actually, doesn't. No, yeah, it totally explains because between 650 and 710. Also, the E-mini open. You type in a username and it shows you 35 connections or so. That's weird. Well, I get robots all the time on Facebook, but it's pretty easy to tell with those. I just look at who we have mutual friends in common with, and it usually gives me an indication of if it's a robot or not. Well, it sucks that we missed that train. Could have bought it down there. I was considering it too. No way I would have held it through that whole thing, but good grief. I guess I shouldn't complain. I did catch one good trade today. That made me look unhappy. I guess another thing is maybe let's just say for argument's sake that I was trading live and that I had somehow bought it 13.5 and I was still holding it, which would not happen. Then at that point, I could continue to hold this and see what's going on. But now, if I had not and I was on live, I think I would be too scared to click because it is moving up like by 4 ticks at a time sometimes. And there's no way for me to know if it's going to continue higher or not. And look at that. It comes down like that. So that one right there kind of makes you want to follow in with it, doesn't it? But it's not. It's a let's see if this one works. Let's see if my read is right here. Not holding a super strong bid yet. What's coming down? Oh, the 10-year ticked it down there a little bit, and it kind of looked like it was a gap, like collapse. But I was seeing some orders pull, and I was not seeing any kind of reaction to it in the level 2. So that is probably a false breakout, return back to value. That's why I put it at 21. We'll see. They might try and shake me. Ooh, come on. Come on. You can do it. You can do it, little 5-year. I believe in you. Fine. Be that way. Oh, see. They're only putting 26, but it's iceberging. Stop. They must just be following the equities. No. I'm going to say that one didn't work. Shoot. Okay. Well, that was a worthwhile experiment, but it looks to me like I misread that because the reason it was moving was because of the E-mini and not anything else. Let's see if we get something down here now. Hmm. Kind of looks like that if it does go, that it's not going to fill me. China and U.S. mutual mistrust brought economic superpowers to brink of currency war, analysts say. Okay. E-mini back to the open. Okay. That 13.5 pulled. Pulled something fierce there. Nice. Is the E-mini going to turn down now? A 5-year is getting incredibly wild here. Three central banks cut rates according to the latest presidential tweet. Yes. Europe certainly did, right? Well, I mean, I kind of feel like that's a little misrepresentative, though, because the Federal Reserve cut rates. So the thing is that they wanted the Federal Reserve to cut 50 basis points. And the problem is that it's easy for the administration to say we need to reduce interest rates because this trade war is going to continue on. But the Federal Reserve, there's nothing in their mandate to consider trade implications in their rate cuts. And they can't sit there and try and make some prediction on if they're going to resolve a trade war or not. What would happen if the Federal Reserve said, we think that the trade war is going to be, going to continue through, and we're going to reduce rates to zero. And then the next day, Donald Trump and China come out with a signed agreement, right? That would be a complete disaster. So I feel I feel that the president is being just a little unfair to the Federal Reserve. He's asking them to do something that they cannot do by their mandate. Like, I think that we're coming to the point where maybe we need to adjust things a little bit. Maybe we need to give the Federal Reserve a little bit more discretionary leeway. Did they replace Wilbur Ross? Would that affect the Fed rate cut or the Dow confidence? That's a good question. That would certainly affect markets, I think. I'm not quite sure how it would affect markets. The markets might actually like that because he's the one that has been like the hawk, right? So there's like an iceberg here at 20, and every time that they think that it's beaten out, they push it back up and they're hitting people into 20.5. Good grief. Never make it easy, can ya? Oh, now it's setting up for a level break. I could actually move that. Ooh. Okay, somebody stacked on the ask to make that downtick happen. Let's see if they push up again. Okay. Thank you. He needs the economy to be blasting away because there is an election coming up. Transactional politics. The slippers I've read that they give him a nap in the middle of the day and talk quietly when he nods off Senate/Senex. But those slippers, sheesh. We're talking about Wilbur Ross. See where I said I could move it. I didn't move it because every time that I move it past 8, that doesn't work out for me. But that was very. I'm kind of happy with myself that I saw that. Jeez. Okay. So when you come up to a high, I don't think that we've ever seen this. One. So this would be a good example here for when you come up to the high of the day, and you can see just one tick below the high of the day that people are absorbing contracts buying it, right? So we came up to that spot, and I could see it. They ticked up and they ticked down, and they did that like 3 or 4 times, and they were absorbing 1,000 every time. They were absorbing 1,000 every time. What that is those are traders buying it on anticipation of them hitting the offers and bumping us up a couple of ticks. So you could see on that one, they were totally getting ready for them to kick it up higher. But I wanted my 8 ticks. So where did I get out at? 18 was where I took it. 22. Shit. It went 16 ticks and it's still going. Well, this might just continue to go. I'm wondering. So let's come back over here. Oh, well, we probably wouldn't be able to see it. Okay, in 10 minutes from now, let's remind me to check the China chart, okay? This is getting a little insane. Like that move right there, I would normally say you shorted at 27. Let's see. Something crazy is going on. This is kind of like, okay, there's a trade, but then you see it's not behaving correctly. This is a real panic. I have never seen anything like this. Not even close. Can you believe that we started out at, where was the low of the day? I should use this chart. So we're going to get a full point today. I guess 1 point isn't necessarily 1 point isn't necessarily the end of the world, is it? Still. Lucas, I don't know, man. I'd rather not trade. I already lost 2 ticks today in this crappy action. Am I being too scary? Oh, you need to FOMO in, Lucas. Hold on. Wynn's got a couple of comments here, but here's the thing, Lucas. Um, there's two ways you can take it, and it kind of depends on your risk tolerance, right? If you have a low risk tolerance, like I think most of us on these tiny accounts do, um, it's probably not worth it. I mean, the problem is you can take a 4 tick loss very quickly. And what happens if you get 2 or 3 4 tick losses in a row? You know what I'm saying? Um, so that if an 8 tick loss day is really bad for you, then it's probably better to stay out. Okay. Now the split side of this is you saw there I took a long and it went against me 4 ticks, and then I took a long again and I made 8. So the swings are so large right now that it's kind of 50-50. You know what I mean? So the or let me rephrase that. Um, the your expectancy here, it with just random action is good because it's going to move more than 4 ticks. So it's just 50-50. You make 4 or you lose 4 or you make 8. So your expectancy is positive. Even if you're just lucky. This is being kind of crazy now. Normally regarding volume patterns, I'd go short at those 27s up there. Yeah. But this action, I would easily had the market go 4 ticks higher just like that. Yeah. It's a 50-50 in this one, I think. I don't know. I did see, it's kind of funny. I said, well, I think you would short it there at 27, but I wasn't getting a signal. I wouldn't have taken it. I wouldn't have taken it. I mean, I don't think you want to sell this. That's probably why it didn't give a signal up there. It's probably because all of the retail traders are too afraid to sell. What's happening here right now is all of those people that had just gotten in from 22, essentially. So let's see what happens at 22, right? Previous resistance becomes support. Maybe. Okay, so I'm getting a lot of large offers show up. Which may be indicative of a little bit lower. Normally when I'd see offers like that, I would be like, okay, they're going to go a little bit lower and maybe I can buy it. We'll see what happens. But because they're doing it at 22, that kind of changes things, doesn't it? Somebody big wants to make sure that it goes below 22. Oh, so the E-mini is on a pullback. When did this breakout at 22 occur? 44, so 2 more minutes. Okay, so let me read Wynn's comment now here. The Bank of Australia is first up on Tuesday, with markets expecting it to stay on hold after cutting rates June and July. Next reduction is currently priced in December, with a further one expected in mid-2020. There is a growing perception the RBA may be unwilling to lower its benchmark below 0.5, suggesting there is a possible floor for rates just a few basis points below next year's pricing. Reserve Bank of New Zealand announces policy Wednesday. Markets are fully pricing a 25 basis point cut from the current 1.5, follow-up to a similar move in May. Treasury paper earlier this year about possible unconventional monetary policy the RBNC may use in a financial crisis referred to a potential low for interest rates of minus 35 basis points. Jeez. So what you're seeing there, Win, is basically banks' main policy tool is interest rates, right? They prefer to use interest rates. Well, the interest rates are already so low that in order for them to ease, they need to do negative interest rates. You can either do negative interest rates or you can do quantitative easing. And most of them in Europe, at least, have said, we'd like to do negative. Well, they did both, really, but anyways, I tell you, watching this, something that keeps going through my head when I watch this is, if we go into a recession, will the United States have negative interest rates? Because the big thing through all this is that Europe had negative interest rates, but the United States didn't. And so there was a dynamic because of that. If everybody has negative interest rates, then what happens? I don't know. I don't know what happens at that point. Okay, so it's now 7:54, so I can come over here on this chart and see, yep. China dollar moving again. Prepay your credit cards with negative interest rates, right? I mean, the thing is that, like, the whole idea of negative interest rates is kind of a difficult thing for me to wrap my head around. Like, why do people buy treasuries if you lose money from having them? You know? Well, I guess you can make money in the short term from the market movements, but come on, that is just, ugh. I don't know, but my little housewife self worries about the credit card bill payments when we borrow too much money. I worry about the interest rates on our borrowing coming due because the global economy is hunkering down. Well, so first of all, for your household, and especially for us, you got to make sure that you don't have any debt. Okay? Because if we go into a recession, you're going to want to have a nice little wad of cash to go and buy things. So that's the first thing. But the second thing is, you got to remember that government debt is not the same thing as a household debt. Well, really, not even government debt, but just like the debt of an organization is very different from a household debt, right? So, like, from a household debt perspective, what happens if you take on too much debt and then you lose your job, right? Then you're in a tough spot because you don't have any money and your expenses are too high, right? But can the government lose their job? No. And the thing is, you got to remember is that when we have a recession is negative GDP growth, right? But that doesn't mean that the country overall didn't still make money that year. It just means that the amount of money that they made that year was less. Right? A country always has cash flow. So they can borrow against that cash flow that is always going to be there. And at that point, the debt levels only become an issue if it gets to such an astronomical level that there's no way that the country can pay it. And even then, there are tools that they can use, because you're talking about debt levels, right? You, a regular person, you have debt. You can't control how much you owe to the credit card company. It's like 10% or whatever you owe, those high interest rate loans or whatever. The government, they set the rate. They can say 2% is too high. We're going to bring it down to 0. Hey, if interest rates are 0, it makes it a lot easier to pay off the debt, doesn't it? Especially if it's 0 and the economy is still growing, which is awesome. And if you're doing that and you're not getting any inflation, which is what's happening right now, then that's like the best outcome you can get, right? So I wouldn't necessarily be too panicked about the federal debt where it is right now. But what I would be panicked about is the trajectory, right? Obama increased spending significantly, and you would think that at that point he would be, that people would be backing off a little bit, but then the Republicans were willing to take on a ton of more debt to get their wish items. And now everybody was willing to kick the can past the election. So unless you happen to get a really, really big majority of Republicans in Congress next year, which I suspect is unlikely, then the debt is just going to continue to grow. And that's bad. Okay. So, they gave us a signal for a reversal right there, and it didn't go anywhere. 2 ticks lower. That's where you want it, right there. Come to Papa. Thank you. So that was a little weird. It was a bid at 22 that pulled. Government spending has increased substantially in this administration. Should we factor that into the equation? I read something recently that this matters. Okay, so into the equation in terms of what bond prices are, yes, absolutely. Because the more government debt that we take on, the lower the risk there, or let's say there's a greater risk that they won't be able to pay it back. Even though the risk is very, very low, the market still prices that in, and that tends to make interest rates a little bit higher. So in this particular context, where the thing that's driving us right now is the Chinese dollar and all of that, so it's not necessarily a big concern right here. But take, for instance, earlier in the year when we were moving down and interest rates were raising, then anytime that there was talk about spending, you would note that it tended to go down harder. Okay, so it does matter, just maybe not so much right now. Michelle does CL influence bonds? Just curious because oil dropped like 4% today. So there is some correlation with oil. I don't really watch it, so I can't comment too much on it. I've seen a couple of people come into the room and talk about the correlation with oil. I think John has mentioned it to me a couple of times before in the past, for instance. So I don't like what I'm seeing here because I got a little bit too much here. So, thank you. And anyways, there's some correlation. I think that in today's case, where you're saying oil dropped like 4%, and I don't even have an oil chart up because it takes up too much processing space. But the oil is probably moving the way that it is because of correlations that it has with currencies. So if oil dropped like 4%, that's because the dollar has become much stronger, and so the cost of oil is a little bit less because dollars are worth more. So what I just did there with only taking 2 is what I wish that I had the vision to see yesterday. We're doing good. Didn't like that loser at 20. The thing that I don't like about that loser at 20 is that one was kind of off plan. Like, I've been only taking them when I'm seeing a significant change. That one was like a downtick that seemed like it shouldn't do it. Maybe in another market that trade might have worked out, but in this market, it was probably a foolish decision. What would happen if China called into their people and guided them into selling the bonds they hold with U.S. debt? A government-driven economy would wield that power, and the people would follow. So I don't even know if you have to think about if they told the Chinese people to do that. The Chinese government buys a lot of U.S. bonds, and they have a lot of holdings that they can sell. They have been divesting themselves of it recently, and so some of that fear was maybe a little bit overbought because other countries stepped up and bought it, and us traders didn't really even necessarily notice until you look at the report later and you say, oh, look, China sold a bunch and this country bought a bunch and this and that. There's a report where you can look at it. And you got to remember, I'm trading one lot. When these multinational companies come in, or sovereign funds rather, multinational companies, when sovereign funds come in, those are things that are swinging tens of thousands of contracts. So it definitely moves the market. It's just they're so big that it's impossible for us to track. So China has a lot of bonds. Could they sell them? Yeah, they could. And if they sold them, obviously, price would move down. And if price moves down, yields move up. And to have yields move up in an environment like this, if they came in and they started selling them, oh man, that would really piss the market off. E-mini would be extremely unhappy to see higher rates. Now, that said, I think that China is extremely unlikely to do that because they would basically, if they start selling treasuries, I mean, man, this thing would crater. The 10-year would just crater. And China it would cause a lot of economic chaos, yes. But China would lose money on their investment, one, and that's a lot of money. And two, it would cause worldwide panic, which, Okay, you're trying to win a trade war. Is the best thing for a trade war is to cause widespread panic? I mean, the problem that China has been having through this whole thing is that even though markets have been volatile and unhappy about it, the US market has been incredibly resilient and the Chinese market has not. So it would be like hurting themselves in confusion. I don't think that they would do it. But there's a lot of people. There's a lot of people out there that are worried about it for sure. Okay, so it just give me another long signal there. Or rather, I think I would interpret that as a long signal. I'm not going to take it because I'm seeing enough zigzagginess. So this is like yesterday. This is one of the areas that, like yesterday, that I would have taken a trade and it wouldn't work out for me. So the only way that I could trade this is if they allowed me to buy it at 21. And if they did allow me to buy it at 21 at this point, I would be a little bit skeptical about why they're giving me that price. Reading again, 1.22 trillion these treasuries came into being as a result of China's export income from international trade with America. It represents the dollarized monetization of decades of imports from China. Yes. So, man, the way that they explain it is really confusing. Here's how I would explain it. The Chinese have been manipulating their currency. How's your performance so far better than yesterday? Oh, yes. So today made 187. Remember yesterday that we're in a, well, and I don't think I told you this or that we've talked about this, Shaolin, but I tend to do poorly in the summer. So I do not trade live in the summer. So this is all just kind of experimental. In the fall, we'll look at the conditions and see where we're at and see if I decide to put more money in and trade it live or not. But right now we're kind of like we made a little bit of a change and we're kind of testing things out, right? So normally I would lose 3 or 4 trades and then quit. So let's just say yesterday that I lost 4. Then I would have lost 128, and then today we would have made it back. But then when you add in the commissions and everything, it's a little sketchy. So, we learned something yesterday, right? There was an area that we shouldn't be trading in. And here, even today, look, almost like clockwork, I said, well, I want to buy it, but I'm in a chop zone. So what that means is I cannot take a trade and expect to be able to hold 2 ticks of risk. Makes sense? If I'm buying it at 21, what are the chances that if I'm at 21.5, what are the chances that it goes down 2 ticks? Pretty high. So I can't take it there. Now that we're moving lower, and the E-mini is actually pushing towards the high end of its regular session now as well. Ooh. Man. The E-mini has moved so much it's hard to see the chart. 28.5375 was the volume point of control yesterday in the E-mini. Let's see here. Chinese exited treasuries. The excess liquidity would be immediately mopped up with a bond sell to whichever bank held the excess cash. If the Fed did not do this, the excess bank reserve sitting on the banking system would push the interest rate down below target. Worst thing that can happen is that the rest of the world decides to no longer send real goods and services to the U.S. in exchange for dollar credits on the Fed's computer. I have to think about that one for a second. So let me back up. So the thing that I was going to say is, the way that I would explain it is this. China has been manipulating their currency. Now, it's in their interest to have a really low currency, but because that's favorable for trade. But they are actually bumping it up. They're actually making their currency appear more valuable than it actually is. Because if they don't, then people would leave China. They wouldn't want their money in China anymore, right? So they've been manipulating their currency, and so the way that they do that is they have to be out there buying Chinese dollars, essentially, or yuan, right? They're out there buying yuan. So if they're buying yuan, how are they doing that? What are they buying it with? They're buying it with US dollars. Where are they getting the US dollars from? That's why they're always buying the treasuries. They need the treasuries so that they can then turn around and buy their own currency with the dollars. Makes sense? So, then you can look at it from that perspective. If they decided to start selling treasuries, I hope you guys win long. I know I sure did. What did he say there? This move down has been pretty crazy, and I actually think that I'm supposed to buy it here. East Asian head of global markets research at MUFG Bank said it was unlikely that China would choose to scale back its holdings in U.S. Treasuries sharply, as that would hurt its own interest and fuel extreme market volatility. Yep, exactly. Very unlikely. I'm kind of starting to wonder, though, because here they're basically letting the yuan drop, and it's causing all sorts of volatility in the markets. And okay, well, so that's not holding the way that it should. I guess I shouldn't say should, as it's not uncommon for it to go through to 2 ticks. But I'm like really likely to get stopped out here. Especially since the E-mini's moving up. Yep. Suck. Well, that's okay. So that one I should point out. I should write a note about. Ugh. I hope that didn't hurt your guys' ears. Okay, this one at 1.5. Looking for a reversal. Looked like a strong reversal trade, but it just completely failed. Okay. That's fine. This one. It's very interesting that it's come back this hard. Like, well, I think that the buy was a better trade, but good grief. Okay. Oops. You can't just refresh it. You have to click the button, I guess. Okay. And this one... This one, I cut it off early because it wasn't acting right. And I was correct. I cut this one off early because it wasn't acting right and I was correct. Okay, save. And then this one was just a reversal too. Bum, 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 bum. So here we're getting like, it's actually telling us to go long over and over and over again, and it's like running over us. I think because the E-mini just had a pretty good buy there. But that buy might have been a correction. So, I'm also only seeing activity on the offer. That's really odd. So I think, can we buy it there now? Okay. Seeing a ton of asks put on there or moved around and stuff. There is an element of fear here that the Fed won't cut as much as necessary to keep the cycle going and maintain inflation near 2%. Oh, for sure. Well, listen, I mean, if we go into a recession, they're going to have to cut back to zero. And they may have to do it very quickly, just like in 2008. Okay. I wish on those the two big losers that I had today, I really wish that I could have been quick enough to have just marketed out at 2 ticks, but it just goes too fast. Well, so far this is looking okay. I think we're going to need to get through this 18.5 first. If we can blow through 18.5 without much trouble, so only 278 to make it go bid. Now if 19 goes bid without it ticking back in, that would be extremely bullish. No. They're gonna have to toy around with it a little bit first. This keeps front end rates elevated while longer tenor yields fall. I have very little idea of what that means. I should not have clipped economy one. Okay, so the thing here is, if you're an investor and you want to buy bonds, which year should you buy? Should you buy the 10-year, the 5-year, the 30-year? And I think if you think a recession is coming along, then what you want to do is you want to buy a 30-year, right? Because in 30 years from now, whatever is happening in the economy right now isn't going to matter anymore, right? So you're going to get a better deal during the recession, because during the recession, the interest rates fall, right? So you get a better interest rate. So they go into the 30-year. And it's kind of like vice versa. If like we're at the bottom of a recession, and then you want to do it in the 5-year, basically that's what causes the yield curve, right? So what they're saying is that that because there is this concern here that they're not going to be able to cut as quickly as they need to, it's affecting the yield curve in a strange way. And so we're seeing this sort of bizarre thing where like the 2 and 10-year spread is like coming down like crazy aggressively. And the 30-year, the 10-30 is not moving quite the same. So like if I can show you here on this chart, I should keep an eye on this, but it looks like it's going well. So you see here's the 2 and 10s. See how the 2 and 10s is flattening, which is bad, because during a recession, the yield curve should generally steepen, right? Versus the ZB. See how the ZB hasn't gone down nearly as much? It's because they're concerned that the Federal Reserve isn't going to cut fast enough. Or at least I believe that is a part. So this chart right here, the little colored line down at the bottom, that's the 2 and 10-year spread on this one. And this one right here is the 10 and 30-year spread. Come on, come on. You can do it. You can do it, I believe. I believe in you. Interesting that we've come up this much. The E-mini hasn't actually like cratered yet. It might do it though. Well, there you go. That was a pretty good downturn right there. If you turn the chart sideways, might you see a golden spiral develop? This just reminds me of the discussion that we were having before you came in today, which was, that most of the stuff that we see traders put out there, like Fibonacci levels and stuff, kind of seems like it's hocus pocus. And it kind of just seems like it works because they're like, see, look, it touched my 50% retracement. And it's like, well, yeah, I could have drawn a line anywhere on that chart and it would have touched it. Thank you. So I don't know if Lucas is still watching, but did you see what just happened there? I took a trade. It was a long at 18.5. It was giving me a signal. Okay. What often happens when you get a signal? Remember, the signal is not the signal. The signal is not the signal. Wait. I'm showing the wrong thing. Okay. The signal is not the signal. The signal is just watch and see how they react. Because what just happened there was a bunch of people got in. And so the market maker decided, I can push it down again. So they pushed it down again. But can you see here how the interest still maintained there? So that's why I bought it again. They can hear the wife moving. Anyways, so can you show your trade entries in the chart? It's easier to see where you took the trade. Okay. Yes, let's do this. First of all, let's make it big. Okay. And then here, On the data series, I can come in here and I can say plot markers only. I believe. Is that it? Oh, no, I can't show it. That's right. Because I'm taking the trades in Jigsaw and not in Ninja Trader, so you don't see the executions. Sorry. But I can do this instead. I can say bum 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 bum. Wait. Where did I do it? Okay, so 18.5. So I bought right here. Or actually I should draw an up arrow, huh? Actually I can draw arrows, can't I? Line arrow. Okay. So I bought right here. Okay. Maybe make that a little smaller. Okay. And I got stopped out. But you can see, can you see here? Interest is still there. So I bought it again at a little lower of a price. So I bought it again right here. Okay. And then I cut that long. And I got out at, well, it'd be 4 ticks from 17.5. So it was 11.5, right? Or sorry, 21.5. Yes. So I got out right there. Can you see those arrows? But anyways, I don't know if Lucas didn't say anything, so maybe he's not there anymore. But the thing that I wanted to point out was, look at the swings. See this little indicator here? Oh, okay, what's going on? Oh, the oil report. Gotcha. Okay. See these swings? That was a 21 tick swing, 16 ticks, 7, 7, 6, 13, 13. So what do I know? That this thing is ranging 8 ticks at a time. If I take a trade where my target is 8 ticks, and if it's just random, then 50% of the time I'm going to lose 4, and 50% of the time I'm going to make 8. So if I can afford to lose 4 2 times in a row, then overall I'm going to win. Simply by virtue of the range. Yeah. 16 tick move with the inventory candle? What? What? Okay, now we're going to have to add. Okay, hold on. How can we do this? I don't think I should do it with the tick chart. Let's just do like 5-minute bars or something like that. Holy shnikes. Look at that. And they had already moved down big time. So they moved down big time because of the China currency thing. And then the inventories was bad for them too. Ooh, my. Can you imagine if you were one of these oil traders that was short from like 53.80? Holy crap. Or if you were a swing trader. I mean, that's $1,000 on one contract, right? That's a crazy move. I remember I used to trade oil when on like paper. And I would just wait for the, at the beginning of the day, there'd be a little spike one direction. There would be a little spike in the buy direction. It was always a buy. And you just follow it. There's a reversal there, by the way. Possible. That one's a little tepid. Especially since the E-mini is pushing highs again. So I don't know if I would take that one, but it is a signal. It could also be a continuation signal, I guess. I was short 3 times and only managed to get 30 ticks. Could have reached my evaluation target if I had some balls today. Yeah, well, but that's the other thing here is like, so for me, I could still take another trade, actually. If I make 24 ticks, then I'm done. But I make 16 ticks, that's good. In fact, I think, let's check. We'll add in yesterday. I think that even with yesterday, even with all of the trades that we take yesterday, it's just slightly positive. Oh, nope, it's not. It's slightly negative. Oh, that sucks. But see, we would have only taken like the first 4. So I should have switched over from the serious account to the experiment account for these right here. Because now I can't use the stats to say, okay, what actually have I made though? But this day is still, we need to still have this in here, right? Because we can say, okay, when the market is really running, it does great. It does great because it allows us to take really good risk reward positions and make a lot. But when it's a day when it's moving a lot and there's not any large players in the market, then it's a different story. Anyways, I felt like I was going somewhere else and then I needed to come back to it, but I guess not. Anyways, the point was is that when the range is that much, yes, you're taking on more risk, but you can get a positive expectancy just from the randomness, which is good for scalping. That's why on a day like this, most scalpers do come out positive. See, they're giving me a really strong signal right here. So let's see. There might be a little push lower first. But something changed there. I'm going to tweet that one. In fact, I'm going to draw a little circle on it. Algo lever. If EL sellers break market back below 2818, then it may be another ugly day. Buyers will need to defend this range. Okay. Well, we're like way above that. I don't know. Could be a long day though, huh? We're going to tweet this one. This trade was a reversal as well. So my reading from what I'm just seeing right here is that whatever it is that we've been doing in the treasuries to make 16 ticks is changed. It's not going to work anymore. I don't know if that's a buy or not. I mean, it tends to be a buy, but we'll see. I want to come in there and make a prediction, but I probably shouldn't on Twitter. This kind of a signal right here, that is usually a buy. But I don't think it is. Because, well, first of all, we have moved lower, but second of all, we haven't seen any bids all day long until then. So that could only mean that something is switched. And if something is switched, you know, our tendency today has been to push higher, then that must mean that all of a sudden now something wants to sell it. Okay. So anyways. Oh, read the timestamp. I see. Algo Lover was pointing out to me much earlier that he was saying that about ES, and that they basically they held it, and so that's why they're buying. Well, I don't have any information about Algo Lover's stats, but she sure seems to me to work. I really would love to see some stats on that though. Live action. I have access to live 9 rooms every day, and I find yours the best. Oh, really? Thank you so much. I hope I'm not. Well, I hope that nobody's using this as like, oh, I should follow Seth's traits, because that could screw us over in the long run, right? Too many people trading the same strategy and everything, that just makes you a target. But I hope that the conversation and everything is useful. I mean, that's, I think, that the real point. That the point is not. I think that so many rooms are built on the idea of following the person that runs the room. And that's why I always say, yeah, don't follow me. Because sometimes I trade really, really bad, right? And sometimes I just don't have edge. But the purpose of this room is more the camaraderie between traders and the benefit that you get from just being around other people and other people that are doing well. Because we've got some people in here that sure are good traders. Much better traders than myself, I think. Ace says, I just got in the room. Oh, I would have liked to have seen if you had picked along in that E-mini. Although it's really quite volatile. I don't know if I had tried taking any kind of, well, except for that trade right at 745, I could have gone short and made a couple of points. But other than that, it's been a little too choppy. Excuse me. The conversation is interesting. Usually conversations are not interesting in real life. Online, I can pause, change the channel, or leave the room. Yeah. Ace of my hearts, who is too much younger. Yeah. Well, I really, one of the things that we talk about a lot here in the channel is about how it seems like social media is driving people crazy. And one of the reasons that subject comes up so much is that I feel that one of the antidotes to combat the way that Twitter and Facebook is driving toxicity is live streaming, because live streaming everybody, when they think about live streaming, they think, oh yeah, those guys like Ninja, and he has 10,000 people watching him and all of that. And which is kind of like, okay, when you're streaming to 10,000 people, how do you interact with the audience? Like, how do you really get to see what people are thinking? Because there's too much noise to even read any one person's comment. And especially when you're playing a game, you're going to be focused in on the game anyways, right? But when we're doing something like this, and it's just like 24 people, and I get to read and respond to every comment, although sometimes when the market gets really crazy, I'm not able to answer every comment. When there's so many things that you've said, and I always feel bad when I don't get to respond to every little thing that we say, but it sounds like you're happy anyways, so I think we're good, right? But you get that kind of thing, and you get to have like a real relationship with people through that kind of a format. And it's really cool, because how often in real life do you get to have an opportunity where you just get to sit down in a room with a dozen other people and have a conversation with a dozen other people, and you're like the focus and you get to guide the conversation, right? And for a person like me particularly, because I might have a really long thought, like this thought that we're going through right here, it can be really long, and I might even get distracted halfway through it. But usually when we get to where we're going, there's often some good insights that we can pull out. And then I start getting comments back from you guys, like Uzi does that a lot, where he points out things that I had missed or hadn't considered, or maybe I knew about, but just didn't realize their connection to the thing that we were particularly talking about. And so you get this just amazing exchange of ideas, an exchange of positive energy that I just don't think you get anywhere else in the world. And you compare that to what happens on Facebook and Twitter. I think that in the future, we'll see a lot more people live streaming, and it'll be a sort of a thing where everybody can, like, what if you had a thing with your friends where, every Friday you get together, and you share a channel, and each week a different person is in charge. You know what I mean? That would be cool. That would be way cool. It's only going to grow and get cooler, and the more. But I think the thing is that the more interpersonal the reaction, the interaction is, the better. And what has happened is, with the internet, we've used the internet to make interactions as impersonal as possible. And I think that what we need to do is we need to do things that make it personal again. I would only tease you if I was not available. I simply can't imagine how. Right. I know a lot of people like that. So There's a girl that I was really good friends with, and at the time I wasn't really that into her. But after a while, I kind of started to think, well, we're such good friends that we should at least kind of see what goes on, and maybe I can like learn something from this, because this was before I had really ever dated. Um, but she was like flirting with me hardcore, and I thought, okay, well maybe that means that she does want to do something, so I should go for it. But it really didn't. She was only flirting with me because she was that comfortable with us just being just friends. It's kind of funny how that things like that work. Like I've noticed. I tell you what, um, it's such an unfortunate thing in our society. But women are so much more comfortable around a guy if that guy is married. It's such a crazy. Maybe that's why so many people, why so many, that thing where girls tend to be more attracted to a guy that's married. But I think it's because they don't see the threat, like their guard is down or something like that. And you can have conversations with people that you wouldn't normally have. Of course, I personally don't think that you should ever get into like your emotions. Like I save that only for my wife, but you can still have intellectual conversations that I couldn't have when I was single for some reason. Mm-mm-mm-mm. She was flirting hardcore. How flattering. She might have been practicing with someone else, but she was comfortable. I don't know. This girl is just kind of like that. She's kind of flirty, anyways, and she was the man. Not to go too deep into it, but this particular girl, she had a lot of siblings, and so something that I've found when you have a lot of siblings, and especially if you're one of the younger siblings, is that they tend to develop that kind of avoidant kind of style of attachment. You know what I mean? Because they're so used to having to do everything on their own that they're almost afraid to depend on somebody else. And so she was like that. She would totally flirt with you, and then all of a sudden just go totally cold. I love a good red wine, but then I ask random strangers to teach me to dance. I would love to go to Paris. The last hop I took was to Guam. I had a girl in college rub up against me like a cat purring. Went for it. She got pissed off. Strange creatures. Yeah. Well, and that's another. I tell you what. For dating for me, well, I read a lot of things that got me good at dating. But the thing that really changed relationships for me was a book called Attachment, The New Science of Adult Attachment and How It Can Help You Find and Keep Love. And it talks about the different styles of attachment and how that affects people. And that really changed my perspective on the world significantly, because then I could categorize everybody by these things and I could understand those kinds of behaviors. And I think one of the things that we have done in our society, because there's different types of attachment. I got to go here in like 8 minutes, but we'll go into this and then we'll go, right? Well, and then we'll post a chart. There is like a secure attachment, which is 50% of people, and avoidant, which is 50% of people, and an anxious. So the anxious person is like the clinger, right? Where like they attach onto somebody and they're constantly afraid of losing them. And the avoidant person is the kind of person that will like, you think that you're getting close to them, and then all of a sudden it scares them away and they push you away. Right. And I think that we're all familiar with those kinds of tropes in movies and things like that. But there's scientific evidence about this, and not only evidence, but that your attachment style develops very young, like when you're a toddler. And I think that something that we've done in our society, in American society at least, is that American society really likes independent people. And so we've carried that culture over into attachment styles, and we feel like, oh, people that are detached, that's a good thing. And so you end up with these things where people think, if you want to attract somebody, what you should do is you should act not interested in them. And then that will make them more interested in you. And so then you get this thing where a girl will like reject you, but then later they're mad because you were supposed to pursue them in spite of the rejection. And you're like, just like, what? Well, what's happening there is you have a person that isn't naturally avoidant, but society is telling them that being avoidant is good. And so they act avoidant when really the best way to do things is to be the securely attached person. That's really what you want to do, is a securely attached person, because those people are more successful. And so yeah, there's a lot of dating books and stuff like that. I would just throw their advice out the window, because they're all based on avoidant attachments. Like they will say you should not act interested in people. Well, what's really happening there is you have somebody that's been in the dating pool for a really long time and thinks that they're good at dating. And they are the avoidant one. And so they'll have people who will get attached to them, and then they'll act avoidant, and then there's that whole thing, and then eventually that goes away, and they'll pick up a next person, and it makes them feel good. It makes them think, oh, I'm really in demand because all these people want me. But that person isn't married yet, and they had to date a ton more people than they probably needed to in order to find somebody and settle down. And so they think that they're good at dating. But the truth is that that behavior, it might lead to you getting a lot of dates, but it does not lead to marital success. So anyways, there's a lot of girls out there that are like that. And that's why that happens. That's also why you'll get these guys that, like, you know, they'll message a girl that they don't really know on Facebook, and they'll be like, hey, what's up? And then the girl will be like, oh, I'm sorry, I already have a boyfriend. And then the guy will be like, oh, fuck you, you whore, whatever. Sorry for swearing, but you know, that's what they'll say, right? And the reason that happens is because the guy is anxious. He's not very experienced. And when they get rejected, one of the ways that anxious people cope with it is to lash back out. They reject the rejector. And you get these guys that are, they basically have like a relationship PTSD. Like they've been rejected so many times that they start to act out because of that. And they actually, the feeling of anxiety, it's almost like depression, like your body kind of gets a high off of it. And so you can get into this cycle where you constantly seek anxious relationships. And so they're subconsciously seeking out girls and sabotaging themselves so that they'll get rejected. And that's what causes the nice guy syndrome. But it's not really nice guy syndrome. It's chronic relationship anxiety stress disorder. Fear of failure relationship PTSD actually makes sense. Yeah. I tell you what, because when my wife left me, that gave me some relationship PTSD, and it took me a long time. And the thing was, as my wife, she is incredibly secure, and she is incredibly, what is the word? She there's like no neuroticism in her at all. If she gets neurotic, it's because her hormones are out of whack. But just her disposition, she is an incredibly emotionally stable person. She was going into psychology. She probably should have become a therapist, but she didn't, go to master's school or any of that stuff. But I think that she would have been good at it. That's the kind of personality that she has. And when I met her, it was not interesting, because when you get the PTSD, the only thing that seems to get you going is the excitement of that it might not work out. And if you get together and it's just kind of works, then you get bored and you leave. And it only worked out, one, because she is as stable as she is, so she was willing to put up with my stupidity. And two, because I had read that book and I knew that I needed to stick it out. Short signal at 2862.75. I don't know if I'm looking to sell the E-mini today. I think that what might happen is we might move. Yeah, he says it's a little too whippy. Yeah, I'm wondering if we'd move sideways for a long time, and then maybe when we've all like recovered from this, then they go and they push it down again or something. Although you also kind of have to wonder with what the Chinese dollar was doing earlier, what the deal was with that. Huh? Okay, so anyways, it's now 8:58, so I gotta get going. But this is, I'm mad about some of my trades, and obviously yesterday sucked, but that was one of the best trading days I've ever had. 16 ticks is the most I've made in a long time. So, and it could have been more if we had gotten rid of those. It could have been, could have almost made 500. Maybe with a couple of little adjustments here and there. I think there was one that we missed. And you get rid of that. That one was off plan. That one was failed, but maybe that could have been -2. Could have been good. So anyways, I will get going. I'll see you guys tomorrow. Good discussion. In the meantime, hey, stay profitable, friends.